Hi guys, this is Kelvin here from Round and Search. Today we're going to look into Irredeemable Convertible Preference Shares. In short, we call it ICPS. So before we start, don't forget to like us in our Facebook page and subscribe to our YouTube channel. And of course, if you are interested for account opening, look into our description. There are guidelines for you. Most of us, we know that preference shares will pay out dividends. Actually, that are not necessarily the case. There are some cases that the company don't agree to pay any dividends, or maybe they will have other arrangement on that. And of course, when we're talking about the dividends, the company can only pay out from their profit. If, let's say, the company is actually making losses, then there won't be any dividend payout. Most of the people out there, they always thought that there are dividend payout for preference shares that's guaranteed. Probably some are 5%, 6%, 3%, that may be varied. But that is the guarantee if, let's say, they make profit in the company. If they are not making profit, then they can't pay out dividends. Voting rights. So there are no voting rights for preference shares holder unless the company wind up. Then you might have some right on voting for some of the asset arrangement and payback. So most of the time, preference shares holder have the rights above the ordinary shareholder to actually get back their investment. Irredeemable versus redeemable. So what are the differences between these two? Redeemable means that the company are agreed to actually buy back the preference shares at the agreed price or maybe the market price at that time. Irredeemable means that the company will not buy back the preference shares. Convertible and non-convertible preference shares, the difference is convertible, you can actually have the right to convert the preference shares into ordinary shares. Sometimes it can be any time during the period of before the expiration date of the preference shares, or some actually have a date that on the expiry date, you can convert into ordinary shares, which non-convertible means that you can't convert into any ordinary shares. Cumulative and non-cumulative preference shares. The difference is that if the company agreed to pay you a certain fixed rate of dividends, if they are not able to pay you the first year, which they are not making any profit from there, and the second year they start to make profit, they have to pay the first year dividends to you, including the second year dividend. And if for non-cumulative, it means that if they are not able to pay you on the first year, second year, they do not have to pay you the first year dividend. They just need to pay you the second year if the company makes any profit. So how do we differentiate the preference shares in Bursa Malaysia? As we know, there are warrants in the market as well. So usually the company will have the warrant listed, go by the stock code and also followed by the W. If let's say if it's a structured warrant, then will be the stock code and then followed by C or H. And for preference shares, usually comes after the stock code comes with a P. So either PA, PB, PZ or whatever alphabet they are there. So if you saw something like this and you are not sure what it is, you always look into the fact sheet and understand more about this before investing into it. Or if let's say you want to do some trades, then you might want to avoid some of this because usually the price fluctuation is not the same as the mother share or other warrant as well. So this is the sharing for the ICPS. And if let's say you found that you have some holdings in your portfolio for these preference shares and you wish to convert into an ordinary shares, you can always go to the company website and then look for the investor relations section. And then you can, usually they will have a form there and you can download it and read through it and find out whether it's worth it for you to convert into ordinary share. The steps will be usually by you filling up the form and then you have a check ready or maybe bank transfer and then send it over to the company. All right, so thank you very much for watching this. I'll see you guys again next time in the next video.